Thank you for tuning in to another edition of the Vulcan Report. Alright, I do apologize in advance. I'm really trying to get the sound thing together, and I have not been very successful in getting the background hissing noise out. So I'm going to continue to work on that, but in the meantime, please don't let that distract you from what's going on. Alright, Friday is options expiration day, so you're going to want to look out for the volatility. We may trade within a very tight range the entire day. Usually the markets will gap up or down on the open and then remain in a very tight range for the remainder of the session. If and when that happens, the first thing you're going to want to do is not be too quick to get in there thinking that you're missing something. The whole point in me developing the software and the system is to avoid that, to avoid overtrading, to avoid just getting in on a whim and in a rush to try to make money. My job is to get in the market at the appropriate time on the right side of the market. Okay? I have went through extraordinary pains over the last 16 plus years developing this system and this strategy to be robust in all types of markets and market conditions across all securities, whether it be stocks, whether it be futures and commodities, or whether it be Forex. It doesn't matter. The system is robust and it does work. That's why I do these Vulcan reports. That's why I post the trade setups each and every day so that you can see them, you can have a record of them, you can go back and you can look at the end of the day and see how those trades did, if they got filled or they didn't get filled, and if they did get filled, did it work out, could you have made money? It's all there in front of you. I want to point out a few things in regards to the charting setups. I have placed some educational material for those of you who have inquired. I got a lot of requests for learning some of the chart analysis and trade setups, things like that. Just basic stuff. That is on the blog at polscan.blogspot.com. There's a link in the video. And then if you go to my homepage, my YouTube page, the links are there too. Very simple, easy to remember, polscan.blogspot.com. If you click on the trading tab at the top, it'll take you to the trading page. And if you scroll partly down through that, you'll find the links to Secrets to Successful Investing and Technical Analysis 101. A lot of material in there, and I think it will help educate a lot of you. Alright, let me also explain to you what I have programmed and what I've done. Everything you can possibly think of in regards to technical analysis, whether it be Elliott wave theory or Fibonacci retracements or candlestick patterns, I don't care what it is. I have programmed all of that. Okay? The system that I use is so unique and so extraordinary that everything that can be known in price action is programmed into my system. I've even went through great pains in constructing an amazing econometric model that takes into consideration all fundamental analysis of a security, whether it be stocks, looking at price to earning ratios and looking at earnings per share and everything you can think of with fundamental analysis, to the balance sheet, to become everything is programmed right here in the bottom half of this screen, and we'll get more to that in a moment. Also, if it's a futures contract, open interest, I look at volume, I look at commitment of traders reports, I look at everything. Jobless claims, initial jobless claims, the Philly Fed surveys, the factory orders, Michigan sentiment, you name it. If it's a government report or any type of report, fundamental analysis, my econometric model takes all that information, crunches it, and breaks it down, and it helps to show you that. I even analyze the bids in the market and look at market depth and order flow and reading the tape. All that appears right here in the bottom half of this screen. You see this blue line here, and you see this black line here? These two lines is the econometric model showing you where the market is, and it breaks it down if the market is showing that there are more shorts in the market, or if there are more longs in the market, and even secret longs and shorts. A lot of people think that when CEOs are dumping shares, that it's not necessarily a good or bad thing. Well, I take that into account. And again, I'm looking at longs versus shorts. For instance, this right here is a chart of the S&P 500, the ticker symbol SPY. Well, if you look here, this blue line here is above this black line. When the blue line is above that black line, believe it or not, it's saying that there's more strength in the market than there is weakness. In other words, more buyers than sellers. It's showing that the bids are winning out overall against the sellers. And what's happening is you get into a situation where these lines begin to meet, like right here, right, like we're doing now. And when that happens, that is a critical juncture, meaning that it's possible that we could get across and the market could be turning, okay, and going the opposite direction. Another thing is I use the Ichi charting technique, which is the Ichimoku system, and you notice the prices now are trading within the Kumo consolidation cloud. This is a bearish cloud, hence the red line, but bullish Kumo cloud, hence the green. Okay, we're in a bearish Kumo cloud right now. It doesn't mean that prices can't break out and rally, but what it's saying is that right now we are in a congestion phase, and we have been in the cloud since July the 23rd. We have been consolidated since July the 23rd. Almost going on a month of being inside the cloud. That means we're not trending. We have not been trending. Hence here at the bottom of the screen here, see the word neutral. Okay? We tried to get bearish here, up in here, then we went neutral, which means we bounced from that bearish phase and got real quick into the cloud and just consolidated. Tried to go bullish here, trying to break out of the cloud, really no follow through, no conviction, fell back down into the cloud. So that's what you're seeing, okay? Right now, you're seeing that the market is trying to make to go bearish. That's what it's looking like. It's looking like the buyers are starting to lose conviction, and the sellers look like they want to take over now. And if you go back in the past, you see, again, we had a lot of bullishness, a lot of buying for a while, and then that's where the market kind of gave up the ghost. But don't be fooled. Just because the lines are meeting doesn't mean they're going to cross. We have to stay vigilant in our analysis, okay? And right now, it's looking like the market wants to break down for Friday's options expiration day. So anything's possible, but you do want to stay vigilant. Alright, let's get into chart analysis now. Alright, as of Thursday's close, the spider, the SP 500, ticker symbol SPY, closed down $1.91. That's 1.74% on the close. Prices closed lower than they opened, with weak bids going into the close. Now, this is bearish, as prices closed significantly lower than they opened. If the candle appears when prices are high, it may be the first sign of a top. If it occurs when prices are confronting an overhead resistance area, this long red candle here, okay, adds credibility to the resistance. Similarly, if the candle appears as prices break below a support area, the long candle confirms the failure of the support area. Now, none of that really applies because we're stuck here within the consolidation cloud, okay? As for market sentiment, we have a negative pulse scan reading of 24.61. The market pulse is negative since it's trading below its zero signal line. The pulse scan crossed below the swing VIX, creating a downtrend channel as of Thursday. This means that negative momentum has entered the market, so we expect sideways to lower prices within the next 3 to 5 days. Alright, the last signal was an overbought sell 6 periods ago, and that was here. Okay. In addition to that, the securities price has set a new 14-period low, while the swing VIX has not. This is a bullish divergence. And since the pulse scan leads the market 3 to 5 days out, we will wait to see if an upside breakout occurs, which is possible. Now, since the last swing VIX signal, the S&P 500's price has been unchanged and has ranged from a high of $109.49 to a low of $107.43. Alright, as for momentum, currently the trend is neutral within the bearish Kumo consolidation cloud. Possible trend reversal of upside bullish breakout list. A close below 106.51 is needed to reestablish the downward trend. However, a close above $110.90 will establish a new upward trend. Alright? As for trend strength, there's currently no trend strength reading at this time. Now, looking at the trend line retracements, we did have some very interesting data that happened on Thursday's close. Okay? The close is currently below its pulse wave cycle trend line retracement of $108.82 a share. And Thursday's sell-off pushed prices on the close below the long-term trend line support. This is bearish as the market is now under heavy distribution. The close also is currently below its long-term trend line retracement of $108.67. And Thursday's sell-off pushed prices on the close below that long-term trend line support. And that is also bearish. And the close is also currently below the intermediate and short-term moving averages. It's going to be significant for the S&P 500 to close above $109.59 a share on Friday. You'd be hard-pressed to do that. Our intraday price projections for Friday are as follows. Resistance is at $109.02. Support at $107.89. Weekly price projection was $110.39 a share on the resistance side and $107.18 a share on the support side for the week. So we'll see where we close on Friday. It looks like we may close closer to the support of 107.18. We may even close below that. So we'll wait and see. One thing to note, we do have a crash alert issued for Friday. Possible market top, possible sell-off is likely due to weak market pulse projections, which we talked about at the beginning of this video. So stay vigilant. I don't really see any conviction until we close outside the Kumo cloud. So we're going to have to wait and see. Even if we do close above or below it, we still need follow through on Monday. Alright? So that's all we got. Remember, take what you can, give nothing back.